All right, you guys, hot off the press. Buyers are backing out of transactions at record levels. Redfin reports. Is that true? Let's find out. All right, so Redfin did a report, and we pulled out some excerpts of it, and it's super kind of interesting because it's on a national level, but yet I'm always humored that a lot of these national reports, they include them here, and well, our numbers are a little bit different. So we're going to use the same metrics every single week, and remember, residential only, and we're going to deal with real consistent metrics every single week. We're going to look at dynamic metrics, and then we're going to be looking at solds, which is like looking in the rearview mirror. So when we take a look at this Redfin report, it says, according to Redfin, nearly 60,000 purchase agreements were canceled in July, the highest percentage of any July on record, and sales of existing homes fell at a rate of 2%. That's interesting. And it goes on to say, many house hunters are getting cold feet because housing costs remain high, economic uncertainty is high, with recession fears on the rise, according to Redfin data journalist Lily Katz. Now, it's super interesting because I am sure that there are areas around the United States, as there always are. There's always markets that are up, there's the markets that are down, and it ebbs and flows. As an example, California is probably one of the funniest markets to watch because on some they're doing great things, and on others they're going, ooh, that's not so good. And it's hilarious because one week it's good, one week it's bad. One reports it's good, one reports it's bad. So again, let's stay focused on where we're at here locally. But the funny thing is, there are some what I would consider good comments that came into this. As an example, some people say, oh, recession bad. Recessions are bad. Okay, recessions are not bad for real estate. Recessions are excellent for real estate because what always happens during a recession in real estate? Interest rates, mortgage interest rates come down. When mortgage interest rates come down, homes sell, and we see home appreciation. Home values continue to increase. Every single recession, we have seen this. So we have been stating that, hey, we have been on the cusp of a recession for the longest time. And in fact, it's funny, if you go and take a look at our blog from a video we did in 2021, it's pretty funny because, sounds like a mirror image. If I had that video ability to go back like some folks do, I just don't do that. But anyway, super funny. But let's continue the report. All right, so what it says is, it says the Federal Reserve is expected to start cutting rates in September and continue through 2025. Totally agree with that. But markets have priced in a fairly fast, at a fairly fast pace cut of rates already, which means that home buyers are unlikely to see a large drop in mortgage rates in the near future. Katz shared. Now, what's important about that, and to make sure we have a very clear distinction, even though my reading skills weren't the best at the moment, here's the thing. When we take a look at Feds and mortgage rates, remember the two are not tied together. Now, the Feds can impact mortgage rates, but the Feds only control your credit cards, your car loans, your HELOCs, your home equity line of credit, what banks lend to each other on a daily basis. Commercial real estate, they affect, right? Because that's a commercial type of element, not residential mortgages. Residential mortgages, well, those are your bonds. They're publicly traded. Now, again, the Feds can affect it, but they do not control them. So if you think, oh, great, the Feds are going to drop mortgage rates by, 25 basis points or 0.25%. Nay. That's not the case. Keep that in mind. Two different things. Now they can affect it, and we do anticipate rates coming down in 2025. If you look at prior shows, you'll see that Q4 of this year, fourth quarter, we are expecting rates to come down a little bit more, subject to reports and what we're seeing as far as the CPI and unemployment and other metrics that the Feds use to evaluate where we're at. All right, let's get on with the show here. Let's move back here. Now, what's super interesting, I said Redfin senior economist Elijah De La Campa. He said, waiting for a mortgage rate to fall isn't the best strategy either. He goes on to say, if you have the means to buy and have been thinking about doing so, now actually might be the best time. Now, he says, that is because mortgage rates have fallen enough to boost your purchasing power, but not enough to bring out all of the buyers that are on the sidelines to drive up competition. I 100% agree with what he is saying. We have seen some additional market activity. Our number of homes coming on market, number of homes going on market are definitely in balance. We're at about 2.2 months of inventory, which says, hey, based on the average of the last 10 years, that's kind of our new norm for a balanced market. We are right there. Now, we're going to see, do we have a bunch of buyers coming off the market saying, I'm going to cancel the sale? Let's go into that, because guess what? That's one of our metrics. All right. So if we do that, but before we do, let's bring in our little news of the week. So existing home sales, are they done sliding? In other words, what they're talking about, are we starting to see home sales actually pick up, which is completely contradictory to some of the other things that we're seeing. However, on a local level, we are starting to, again, see that appreciation. We're starting to see our seasonal change, albeit we're going to see a immediate slowdown here as we come into the Labor Day weekend, kids back in school, last minute vacations. So starting about this coming week, because this coming weekend is going to be Labor Day weekend, we're going to see probably a 30-day slowdown, and then we're going to seasonally pop back up again. So don't be surprised if you hear people start talking about, oh my gosh, it's falling, the sky is falling, and it's not. It's seasonally normal for us. Okay, bottom left. Last week, refinancing surge quickly fades. No kidding. Because people are pulling back saying, hey, I think rates are going to come down a little bit more, in which we agree with that. Upper right-hand corner. Hey, I guess I could blow this up a little bigger for you. There we go. All right. 30-year fixed rates are at 6.44 par pricing, and you can see by the chart there, we have been coming down gradually ever since last year. And in fact, we're down 0.77 or almost, a little more than 3/4 of a point where we were at last year. And bottom right, we have our rent versus buy. That is a calculator for those of you out there that are questioning, hey, is it cheaper to rent? Is it cheaper to buy? Listen, if you look at just today, a snapshot just today, it's cheaper to rent in a lot of the East Side and Seattle metropolitan areas. As we branch out, we look at Kitsap, Thurston, we take a look at North Snohomish, things like that. It's actually cheaper to buy than it is to rent. After if you look at a 5-year window, even in the Seattle areas and even on the East Side, it is cheaper to buy than it is to rent. But if you're only looking at a brief, hey, just a snapshot today, of course. But as you look at it over the long term, over a 5-year window, actually, it's cheaper to buy. Anyway, moving on. All right, so let's move over here. Let's take a look at what Freddie has to say. Freddie says, and there we go, year over year, we are actually down 0.75%, 6.46% or 6.5%, if you want to call it as such. And you can see by our chart there in 2023 on the left how we came down and how the market today is positioned a lot better. Now, mortgage rates, again, are publicly traded, and so they change hour by hour. Some programs exist today that didn't exist yesterday, and there'll be new programs tomorrow. They come and go, depending on the investor, whether it's Bank of America, Chase, Wells Fargo, Qualstar Credit Union, Boeing Employees Credit Union, TechFast, whoever it is, they all have special niche programs. make sure you're paying attention to them. All right. So as we move along here, and let's take a look at what our market is doing. So again, our days on market, unlike the reports that are saying, hey, days on market on their way up, they're up 28%. We're actually down. Right? Our days on market are actually down by 4 days, not up. And we are looking at, even though a small increase, but we are still down year over year, which is to be expected. When we take a look at the chart on the right, and we talk about, in fact, let's just blow that up a little bit bigger for you. All right. Hey, listen, we had 1,172 homes come on market in the average of the last 7 days. We had 1,299 that went off. Okay. Well, when you then take a look at the back on market, that would be a sale fail. There's only 148. Well, that number is significantly less than it was as far as what the national average is. We do, and it is normal to have, home sales that fail. And it could fail for any number of reasons. And it doesn't mean necessarily the buyer got cold feet, but there's any number of reasons. Could be an inspection. It actually could be a financing or a qualification issue. It could be a technical issue that goes with the home that is inconsistent with the needs of the buyer. There's any number of things that could happen, and including, yes, people that get cold feet. I just don't think it's as big of a number in our area, unless I call each and every one of them, which I'm not going to do. That would be the only way to really find that answer. Otherwise, we would have to guesstimate like some of the others. Now, when we take a look at the number of cancels, as you can see, our cancels are up, a little more than what we would like. They're at 192. The however that's also consistent. And when you take a look at the price reductions of 770, hey, listen, it is completely normal to have sellers that overprice our home. It is totally normal to have a seller caught in the trap of a agent, unfortunately, who is buying a listing. That doesn't mean they're buying their house. That just means they're giving them a feel-good number that they're falling into. And of course, they're like, oh yeah, I could do that. Oh, if they'll pay me this much, that's absolutely fabulous. But the reality is that they end up getting frustrated because they keep getting asked for price reductions, and it's a downward spiral, unfortunately. However, it's not always the agent, because sometimes it is the homeowner that just says, my house is worth this. And that's because I have sentimental equity that has no value. Anyway, I'm just saying. I'll get off my soapbox. All right, let's move on. Let's talk a little bit about what's going to be happening in the Northwest MLS as far as pricing. Here we go. Now, when we take a look at this, as we can see, the red line are the solds heading in an upward trend. The green line up above is the number of what we call the average for sale price. Okay, so if we make this a little bit bigger, excuse me, we can see year to date, the upper chart there, we're actually $1,000 more than we were last week as far as an average for sale price. And in fact, our average for sale price is 9.4%. Now, let's be very clear. That doesn't mean that our real estate market has gone up 9.4%. That is not what that means. Our actual appreciation on average from our metrics is about 5%, 5.2%, maybe 5.3%. It's in the realm of normal, healthy growth, but it's not crazy, and it's not low. It's a tad bit higher than we expected, but that's a good thing. But again, it is a moderated growth. There's nothing crazy out there. Now, let's pop back and let's take a look at the month to date, meaning the 2023 August and 2024 August. It is the 24th, so this is numbers from the 23rd. We are actually up $3,000 as an average sales price over last week. The same numbers for the average listed or for sale. Those numbers are consistent, and there's a nominal downward trend on those, but it has been that way the entire year. So it's not unexpected. All right, so 2020, we saw consistent growth up, and we're seeing normalized growth now. Will we see some of that adjust as we hit October, November, and December? yeah, we're going to see the seasonal slowdown, which is probably going to happen right after Thanksgiving weekend. People really start to take a break from real estate, which is actually the best time to buy a home. Just saying. Anyway, all right, moving on. Okay, so when we take a look at what's going on as far as volume, this is where the kind of the tire hits the pavement. And our numbers actually year over year, let's blow that up for you. Year over year actually looking really well. We're actually up 2.1% on pended and about 1.3% as far as overall sales volume. Excuse me. You see that same metric on the month over month between August 2023 and August 24. You can see that our numbers have been increasing. Why? Because rates have been coming down. Now remember, some of that will change in October, because October of last year, we saw our mortgage rates that were going, in the uppers, mid to upper sevens start to come down. And that brought in a bunch of buyers. Why? Because when rates come down, buyers come out of the woodwork, take advantage of some of the opportunities. We'll sprinkle in a little bit more inventory, and we're going to see a very healthy, balanced market in our area. We're not seeing necessarily price reductions, but buyers are also super smart. Okay, for those sellers out there. All right, now, if we take a look at what's going on yep, that's right. We go and we take a look at new construction. New construction, funny enough, we're seeing some really great ads out here. And you can see that as we get down to month end, they are increasing the level of benefit. And you might say, George, what the heck, man? Why are we seeing a lot of these buy downs and whatnot from builders? That is super simple. Listen, when we increase the number of resale opportunities, which means that they're not paying that new construction premium of typically about 10% over existing, homes for sale in the area. Hey, listen, that just gives you a lot more buying power, especially if the average is about $900,000 to $1 million. Hey, that gives you $100,000 more buying power for either a bigger home or a bigger yard or different options, maybe closer in. There's a lot of considerations that come into that. The key thing is builders have now taken kind of a second seat to the resale inventory that is out there. And that is why we're seeing some of the builders offering different programs. So if we open this back up again, you can see that they're offering you some really great introductory rates. These are typically the first year, okay? That does not mean that is a forever rate, but they do have really good numbers. Now, as we can see here, when we talk about the average, again, for sale price and the average sold price, okay, we are seeing, let me blow that up a little bigger for you. We are seeing that even though year to date, we're down pretty much straight across the board. The average for sale of last year and this year went down $1,000. That's pretty much, small potatoes. However, when we take a look at the lower chart, you can see that the average for the average price sold actually went up $25,000. Now, remember, it was down $60,000 a couple of weeks ago, and it does. Like everything, it goes up and down depending on what inventory is out there, what incentives, what time of the month is it. There's a lot of things that come into play. The key is that you will see consistently is that the new construction actually is holding itself, pretty firm, although their sales are down about 5%. That is just a big incentive for buyers out there because that makes builders a little bit more motivated. And month end and year end, super important to a lot of these guys. So keep that in mind if you're on the fence about, do I consider a new home or not? All right, moving on. Okay, so when we take a look at it, let's talk about volume. And this is kind of what's super important. Now, last week, our numbers were down on the year to date, which was expected. But last week, we also had 12.9% increase in number of homes sold, and they actually bumped up to about 22% this week. Again, super important because let me blow that up for you. Yeah, a little bit easier to see. Here, let me blow that up. Hang on. There we go. All right. As you can see, even though the solds, even for just the month of August and year to date, are still down. And again, that changed, that flip-flopped when we started to see more inventory come on market. They're having a resurgence. Why? Well, because they're offering different incentives. We also had a drawback on resale homes coming on market. That dropped down last week. And we also had newer homes that came on. So there was a lot of incentives for people to look at new construction, and that came to play. They're not massive numbers, okay? But still, we're seeing that trend, which is super important. Now, if we go and we take a look at the actual REOs that are in our industry, this is so funny. All right, let's blow this bad boy up. All right, now, we have 24 wall of shame candidates this week, and yes, we do send it out for them to, hey, you might want to fix your listing, right? We take a look at this. There's actually a 34% increase. We have 63 actual homes that are bank owned, 47 last year. And then, of course, all of our other numbers are down and consistently down because of what we're seeing on a whole for the REO side. Now, there's some folks out there saying we have a shadow inventory of bank-owned homes, and I refute that. Our notice of defaults have not seen a massive increase at all. We're seeing a lot of workouts. They still have a lot of equity with most of the homes around here. I'm not saying that there aren't any foreclosures, but there's just so few. For the investors out there that think, hey, this is a great idea, I need to buy a foreclosure, I can get a great deal, you're not. Listen, we don't have enough foreclosures. I mean, holy smokes, we have 60. There's more cities in Washington State than there are foreclosures available. And there's not even one per city, to give you an idea of how few homes there are. Now, they will also do paint, carpet, and vinyl, put it out on market value. Yes, banks are notorious for overpricing. They just are. And then they bring it back down where the market will say yes, and then they get sold. That's why REOs will always have a higher time on market than a traditional seller. They have to maximize investments, have to make sure they don't leave dollars on the table. Anyway, all right, if you have any questions, please leave them down below. Remember to like and subscribe. The benefit to liking and subscribing is that you get alerted when these come on. It also helps the channel. So hopefully if you got this in a very organic way, that you are able to share that ability for others to see it. Again, there's no selling. If you have any questions as far as other areas or condos or multifamily, drop it down below, send me a message, text me, call me, whatever, and we can go ahead and send off that report for you also. In the meantime, it is very stormy outside today. It almost looks like fall. Be safe out there. Have an absolutely beautiful day. And in the meantime, I will see you on the next video. Take care.